Now, a lot of us, if we're disciplined, then it's okay to put it in other assets. But if we're not disciplined, KiwiSaver is actually a really good way to make sure that you pay yourself first, you don't see the money, and that is just accumulating. Welcome back to another Home Seeker podcast. I'm your host, Blandon. Today, we're diving into what I call my Do Nothing Millionaire Plan. Now, before we begin, this is very important. It's not financial advice, so always consult a financial advisor before you make any investment decisions. Now, let's talk about one of the best kept secrets in New Zealand that is for financial success, and that is your KiwiSaver. Now, when we talk about KiwiSaver, often people might think, okay, it is for my first home, it's about saving up for a deposit, but it's more than that, because even after you buy your first home, it's important to incorporate KiwiSaver into your wealth building plan. I would call it the secret weapon to becoming a lazy millionaire. Now, I recently came across this CanStar article that talks about the top 10 KiwiSaver in the last 12 months. And with its latest figures, it shows that majority of the KiwiSaver earned more than 10% return in the last 12 months. Some are sitting at like 13%, 15%. It's been pretty good for KiwiSaver. But of course, there is a caveat because the year before that, most of them had negative returns. So it's a very good reminder that investments will fluctuate over time and it has its inherent risks. Now, if you compare the growth funds in KiwiSaver to something like properties, you'll notice that KiwiSaver have higher risk because most of the investments are businesses. And because of that, they have fluctuation up and down. They change in valuations, they change in growth size. Whereas property is a more steady asset because it's brick and mortar. It goes up in value because of your population growth, your economic growth, as well as supply and demand. So because of that, we should expect a higher return on KiwiSavers when compared with properties. Now I'm going to show you just some quick figures. Although KiwiSavers have earned more than 10% in the last 12 months, we're going to do this exercise with an 8% return. This is more in line with what you have been seeing as a return from KiwiSaver. It's probably slightly higher than that, but 8% would be higher than properties and lower than the average of growth funds. If you're a household with $150,000 of income and you put away $5,000 a year into KiwiSaver, not counting the tax credit that you get from the government, in 25 years' time, what do you get? So $5,000 a year over 25 years on 8% return, you would accumulate $395,000 at the end of that period. This is like minimum contribution to your KiwiSaver. But what if you put a little bit more effort and budget for a large amount to go towards KiwiSaver? Instead of $5,000, we're going to triple it and put $15,000. And in 25 years' time, you would end up with $1.185 million. And that's absolutely nothing to sneeze at, especially when I didn't consider the government tax credit that goes into it as well, which is essentially free money from the government, $1,000 or something like that every single year. If you're a couple, obviously that will double. So it's basically icing on the cake. Now, some of you might be thinking, well, if I put my money into KiwiSaver, it's a good chunk of my income and I can't use it until I'm 65. Now, a lot of us, if we're disciplined, then it's okay to put it in other assets, but if we're not disciplined, KiwiSaver is actually a really good way to make sure that you pay yourself first, you don't see the money, and that is just accumulating for retirement. Now, if you are disciplined with money and you can keep your hand out of the cookie jar, then there are alternative choice like a index fund, which is what I personally invest in. I've got my KiwiSaver and I put money towards an index fund. And what is that? It's looking at your NZX 50, that's the New Zealand version. If it's American, it'll be S&P 500. Why is this a good method? This is not a recommendations by me, but from the famous investor Warren Buffett. Even though in an index fund, you only get the average return of the market, often over time, you're outperforming most fund managers because of the fees that's charged on an index fund is significantly lower than a fund manager charging on a regular fee plus a performance fee. So over time, you could often win with just buying the index fund opposed to getting fancy with a fund manager with the latest investment strategy that's going to have like your crypto and whatnot in it. Now, more and more in the industry as well, you are getting KiwiSaver providers coming up with an alternative that gives you the same effect as a KiwiSaver, but money that's liquid, meaning you can withdraw it if you need to. So if you are thinking of using KiwiSaver as your saving strategy or retirement strategy, you could consider having the minimum amount that you need into KiwiSaver to get the tax credit from the government, and the remaining portion you can put into a more liquid fund that mirrors the KiwiSaver. Now, it's also important to note, even though I love my KiwiSaver, I check it, once a while, I like my index fund, but my main wealth still goes towards property. And the reason for that is when you're starting out to build your wealth, you can afford to take higher risk. And for me, because I'm a bit younger, I've got more years to invest. So I want to go for assets that have leverage. And because properties, you don't just put $200,000 in properties and get the return on $200,000. You would get $200,000 deposit plus the remaining portion that you borrow from the bank, and you get capital gains on that. And because of that, my overall return on properties is higher than the best performing KiwiSaver. And so for myself, I do try to diversify into different asset classes. Warren Buffett also once said diversification is for the dummies or someone who's ignorant. And so for me, I want to be that ignorant person because I can't claim to be an expert in any of these investments. So I'd rather take the approach of some diversification. Again, this is not financial advice. This is my personal preference on how I manage my investments. Now, if you guys have questions about this and you guys want me to expand on any of it, I'm more than happy to. Definitely leave a comment in the below. If you don't have a plan yet on how you're going to build your million towards retirement, then talk to one of the wealthhq advisors. We can have a look at whether or not properties or KiwiSaver is going to be relevant for your situation, and look at putting in an appropriate amount that's going to work towards your goals. It's a free service, so definitely reach out. Now again, if you found value in this video, all I ask for is one thing, that is to share it with one other person who will find value from it. Thanks for listening. I'll see you guys in the next episode.